What is up? This is going to be a trade recap for 9th of February 2026. Today was an absolute mandatory. I didn't actually come live today because I couldn't. Woke up late and stuff like that. So, alright. So what was I looking at? My overall bias is bullish. Reason to go bullish is this low right here. So market opened. We have a lot of low resistance liquidity up there. I got this and this protected high and probably the final round liquidity. Weekly candle opens, creating a gap, and we didn't actually fill this until London session. And we came back down, sweeping the most recent liquidity as this, as you can see on a 15-minute time frame. Exactly at 50%, we are rejecting from the 15-minute fair value gap, which also has an internal low right there. We got this liquidity sweep right here. And we got this 15-minute tiny fair value gap. Price really respecting it. Uh, as you can see, price sweeping out this 15-minute lows right here. The one right here. Aftermarket open. And what we are doing after that, straight up and straight up an inversion right there. We got 1 minute inversion right. So and also a change in state delivery, which sees the prices really going up. But one of the most unconvincing thing was there is no fair value gap in that leg. That is the one thing that I was worried about, and I couldn't actually take a trade right there. Again, we come back into this fair value gap after sweeping this, after breaking the structure, um, and then we have an inversion. If we are about to go down, this change in state. So if we are about to go down, if we see a, we if we see a 1 minute fair value gap right there, and if the price goes and clearly rejects and then breaks this low, then we might have probably ended up looking for short position, maybe target this, and this. And also on top of it, this is Monday. Monday is not going to be a lot of move, and we don't have a lot of news today probably. So that can also be a reason why there is only tiny move, a bit of upward move. As you can see, after breaking the structure, we could have entered right here, maybe probably keep your stop loss below. And that could be one entry right there, but we got this SMT right here. Uh, I don't even know if that's an SMT, but that is an SMT to my eyes. Let me just go ahead and show that to you. It was 10:30 to 10:27. Oh, this this is 9:38 to 9:55. There it is, 9:38 to 10:55. And then you didn't reflect right there. And what I was looking at, I wanted to see a break of structure, which really happened right here. As you can see, price break structure, creating a 1 minute fair value gap. As soon as the price breaks the structure, I ended up having my limit order right there, and then having my stop loss really tight, and I almost got stopped out right here. I don't even know how I didn't get stopped out. Maybe probably tick away from my stop loss, and that could have been a $30 stop loss right there. As you can see, this is just a 16.50 move right there. Another 14.50 move. I mean, 14.50 points stop loss, which is really crazy risk to reward ratio. 1 is to 9, 1 is to 9. Probably 1 is to 9, 1 is to 8, 1 is to 10. This trade is actually, I'm not even joking. This was my stop loss. So the reason for going longs after, I mean, price break this high, we still have this internal, I mean, if we still have this London high, if the price break about that high, maybe we could go break even and then like let the price run after that, right? So in a way that this trade is the safest trade, honestly, in my point of view. And probably I should have got stopped out right here. Well, maybe price want to come back down here and then like go up. I might have got stopped out right there, but this was a break even move. Once I have a breakup structure, I immediately break even the trade after that, and then price went up, almost taking out Asian high. That's the first liquidity that we have that we should be looking for the price to do go over there. And as goes closer, as you can see, we reject off nowhere right there. So I decided, okay, the price is about to come back to 50% of this range right here. As you can see, price come back into the 50% and sweeping out the internal low that has been created initially, my stop loss, and then holding this 1 minute fair value gap inside the discount, and then price started shooting up. So as soon as I saw this rejection right here, I ended up taking a trade at the very next candle, keeping a stop loss below this fair value gap. That gives me a risk of 1 is to 10.26, which is really crazy. So once price broke this structure, I break even that trade, and I was well and good sitting on break even. Even though I shouldn't be even trading today, and this trade was a banger one. I was marking out all the breakup structure right here, right here, right here, and the final take profit. I was supposed to target this, but as you can see right here, the reason for targeting that, this is where exactly the bearish move happened, right? As you can see, that's a clear market maker move. We go up, sweeping the recent high, and then creating a market structure shift, and then coming back into the 50% or 75% or probably inside the fair value gap and started moving down, right? That's where this happened. So which leaves us this to be a protected high, this to be the high that the price most likely to come back down and take it. Right here, as you can see, we came back up exactly uh, sweeping that, and then we started rejecting right off there. Why it could have happened right here and stuff. Exactly, just before take profit, this is just a manipulation move, makes you wait and stuff. So this is actually safest point, safest point. If you have a protected high, target the next recent high, right here. So this is a protected high. This is a high. Most likely, price really wants to go up, come up and take it. As you can see, I am just targeting this candle closers and opens. There it is. That was a pretty awesome trade. My only regret is that I could have just taken this trade on. Like I had 100% discipline, 100% patience, and risk management was like top tier risk management. I'm saying this top tier risk management. So I was having one contract on this trade. Imagine if I were having two contracts, probably I would have made 600 bucks across accounts. So I'm not gonna say how much I really made. I just had one contract, so multiple accounts. By the way, that's compounding. So this is a textbook trade in my book, probably in my book. Probably most of them wouldn't take this trade. As soon as I saw this Bullish engulfing candle right here. I know for a fact that the price is definitely going up there. And I was like sitting and chilling. I was playing games actually, literally. So it was pretty awesome. And yeah, that is about it. It's a A plus, A plus, A plus risk management and A plus entry model. A plus, A plus day, to be honest. Only thing that I regret is that I could have just came in a bit earlier. Maybe I could have just was before market open right around there, and then I woke up a little bit earlier and then do the stuff that I need to be doing. So yeah, that's the only regret that I have. But other than that, this is an awesome day right there. Let me show the execution. It's a nine. Gonna There it is. The first trade coming back to break even. The second trade right here, going up. Boom. All right. So yeah, that was an awesome trade. So I really, as always, believe in yourself, believe in God. Anything is possible. So just do it. So as always, and come on, adios.